All righty, welcome. So let's jump into today. We're just going to do a session on IRA trading. It's not meant to be comprehensive end-all be-all. I just want to give you some insight as to what I'm doing on some IRAs as well. Maybe give you some idea as to how we are managing these. And then if you have some questions, you can certainly jump in on it. I'm just going to review brief trade plan. The IRA trade plan, while it's different than the main trading plan in a non-IRA, a lot of the info is going to be very similar. So the trade setups are essentially the same, but the types of trades is really where we're going to be a bit different. So I think that's where you're going to see the biggest difference. So let's just jump into the IRA trading plan. You'll notice that this layout looks pretty familiar with where we are on. I noticed a little misspelling there on something I posted. So, okay. All right. So it's going to be very similar, but the IRA goal is not quite the same as a trading plan goal. And in the IRA, my goal is about 1.5% a month, which is about 18% annual for the year. Now, there's a significant difference between a 3% a month goal in the trading account for Income Navigator. It's half of that amount. 18% a year, I feel it's a pretty comfortable trade. I don't feel we're above our skis too well, and because of the limits in an IRA with margin and buying power and so forth that you run into, I think it's very risky to try to exceed that 18%. Doesn't mean it won't happen. Doesn't mean you can't do it. Some of these trades are built well to really pay off if the market drops a bit for us. So it's all good. But just like in a trading account, I'm still looking for monthly realized income in an IRA. And I know that's fundamentally different than most of you have either been taught or how you trade. For an IRA, everyone thinks of, buy and hold. We're going to buy and hold. We're going to write covered calls on our dividend paying underlying stocks. You know what? That's all great and well, and there's nothing wrong with that. In fact, if you really want, you could just buy SPY and then write covered calls on it. Why own Apple and Google and Microsoft and Tesla and Nvidia and anybody else? Why own all of those stocks in an IRA that can go up, can go down? If you really wanted safety and you didn't want to do a whole lot, then you just buy SPY and you wheel it, okay? Or you write covered calls against it and try to juice your returns a bit. However, I'll make the statement here as well that probably half of you won't like, is that I really don't like covered calls. And I know lots of sites out there tout the covered calls as the greatest thing ever in accounts because you can just make consistent monthly income. Well, you can if the stock is going down. If the stock's going up, yes, you do make some monthly income. However, you're limiting your returns when you write covered calls. Now, nothing wrong with that if you just want to generate X amount of dollar, but typically those calls will only expire worthless if the stock is not moving or it's dropping. And I don't think that's really the goal of my IRA, is to watch my assets drop so that I can make a little bit of money while I'm watching the overall assets drop. So in a sideways or down market, I think there's nothing wrong with that. Again, there's no right or wrong way. I'm just giving you my way of doing it. I also don't want to get too overall consumed with watching the market. My Greeks are a little bit different. In fact, I posted them in here, but I'm gonna change these up on you guys. There's no way we're going to get to the same amount of theta and delta that we normally do in our trading account. So we'll talk a little bit about that. I'm also risking about the same amounts. I'm keeping it to 2% of my portfolio on any particular trade. I am trying to diversify by strategy a bit. Now, I don't have as many strategies in an IRA as I do in the trading account, and I don't take the same liberties in an IRA that I do in a trading account. And all of these are scalable. I will go up to about 50% using span margin in many cases. Doesn't mean I'm going to try to be there all the time, but often I'm pretty close to that amount. And one reason I don't feel that 50% is an unreasonable level in an IRA is because you are typically using a lot more margin in an IRA for it. So span margin has a lot less of an effect in an IRA. Doesn't mean it has no effect. Okay, span margin can certainly play havoc with anybody's account. I think it's something that you need to keep an eye on and watch your margin as you go through. All right, so let's jump in, and the rules are the same. And I'm going to cover 3 different strategies when it comes to an IRA, and we're going to talk about the long-term 112 trades, which is really still to me it's the core of the IRA. We are going to talk about strangles on futures, and then we're also going to talk about 112 on futures and potentially some other spec trades. The main driver for this account is going to be the long-term 112 trades. And I'm going to be conservative when I'm talking here. In practice, I'm probably a little more aggressive than what I'm showing here, but I do want to share the conservative view because you'll notice that the majority of this is going to be 112 trades and strangles. You will notice that I am trading mostly futures in an IRA. In any IRAs that I have, and there's about 7 of them that I have here, I am not trading or holding any underlying stocks or options on stocks. It is strictly all futures trading. Gives me the best chance to be successful. Let's jump into it a bit. I don't think I need to go through these strategies, which I think you would rather see the accounts, so we'll jump into that. But the long-term 112 trade on ES is where we are. We're typically going to be putting these on twice a month when we do in trades. I am going to show you something slightly different than this, but if we're putting them on every 2 weeks, when we get to a 120-day expiration, you're going to, going 4 months out, I'm going to have up to 8 contracts at any one given time. I'm going to use the number 7,000 as my average BP, and I'm going to show you where I got that. Maybe I'm taking some liberties here. You'll have a chance to take a look at that. That is typically not the initial margin. That's the average BP for each trade. The initial margin is typically a little bit higher, but I do peel some of these off when they get to 95%. And then as trades do mature, when they're about halfway through this, they're down to about 7,000 from 11,000 on margin. So this is where I'm getting these numbers from. It's a little different, but I'm going to talk about a $200,000 IRA, which is the one that we play with here. So it's the one I selected to use as the Income Navigator portfolio because I thought 2,000 was a good number to get in to people with. I'm going to use about half of the BP that's in that account. And my goal is about $3,000 a month, which is 1.5%. I'm going to show you my overall trading, which I think gets me a little bit above that number, but 3,000 is the goal. I don't always close every trade all of the time on schedule. So we'll talk about that a little bit more. So we're going to do the long-term 112 trades. I will put one on every 2 weeks at 120 DTE. I will ladder up to 8 on when the naked puts get to 95% winners. I will take those off, free up all of my BP, and leave the put debit spreads on. So at any given time, I may have 8 on. However, most of the time, only 6 of those at any given time actually have the naked puts still on. So usually only 6 trades are active with naked puts. The other 2 are just put debit spreads. So it's giving you a little bit of negative delta, which is giving us a little bit of a hedge. The trade entry and exits are the exact same as we normally do. Strangles on futures is also something that I will do in this account. I will put on, if you look at the trade plan, I'm going to put on up to 5 of these. My goal is to generate about $1,000 a month in this size account. I'm going to use up to about $30,000 in buying power on this. And here's what I'm looking at. I'm not trading a lot of different futures contracts. I do select more of my favorites here, but I do like gold. The average credit on one gold strangle using one contract generates about $850 and takes about $6,700 in buying power. The average credit on an oil CL strangle is about $850 using about $5,700 in buying power. If I sell one ES strangle, I'll make about $1,250 using about $7,200 in buying power. And then as another example, if I do 7 contracts of the Aussie dollar on a strangle, that gives me about $1,000 in credit using about $5,800 in BP. So I'm using an average number of around $6,000 to estimate my initial BP. But again, we'll take a look, but that BP is not always going to stay at that initial. It will start to drop. But I'm going to be conservative, and I'm going to say I'm going to put about 5 of these on at any given time, 5 strangles. They're going to average around 6,000 in BP. It's going to take about 30,000 in buying power overall. Same management. I'm putting them on around 6 or 7 delta, but you can move those around a bit. I'm going to try for about 90 DTE, but I'll go a tad less or a little bit more just to get as close to that as possible. I do like to scatter my expirations and strikes if I'm putting on more than one, but you'll see that I do not have, more than typically 2 of any one running at one time. But I do like to see that they're different. And then management's always the same, 50% winner, 2x max loss, which is a 3x stop. I may look to close at 21 DTE to remove gamma risk. I typically avoid ES strangles for the most part. Doesn't mean I will never do them. Okay? And you'll get a chance to see what I'm doing. And I actually did put one on yesterday in the IRA, but typically I don't, because I don't want to overweight using too much ES or the E-mini S&P futures. Since I'm already using them for the 112s, I don't want to have too much of that on by adding strangles to that. And now I've got way too much locked up in one specific underlying, even though I do not believe in diversification. I believe that you can diversify by using ETFs. I believe you can diversify by using indexes. I believe you can diversify by using different futures contracts. But I also think you can trade using just 1, 2, or 3 different futures contracts that are slightly different, even though there's some loose correlations between oil, gold, ES, and then maybe you can get into some of the Forex like 6A, 6B, 6E, something along those lines. I don't think you need 90 million different stocks to trade. And Warren Buffett is another big proponent of not needing to diversify as well, especially when you look at the amount of Apple shares he has, which is about half of Berkshire Hathaway. So you can Google Warren Buffett and his statements on diversification anytime you wish. And then the last piece here is strategy 3 is I'm looking at 112 trades in other futures underlyings, oil, gold, RTY, NQ, as well as maybe IWM or some other underlyings as you go. I'm only looking to take in about $500 to $700 credit on this size account. It will use about $10,000 in buying power. So you can only get a handful of these trades on at any given time. If you look at my trade plan, I really don't have a max quantity on these. But I am using 30,000. If I'm averaging around 10,000 in buying power, I'm only going to get potentially three extra 112 trades on in there. They are more conservative. They give you a little bit of a hedge, but not a full hedge. They give you a little bit lower return than a strangle. However, I do like them in an IRA. I think you get paid if we start to drop a little bit and you get a little bit more safety. All right, management is pretty much the same as all normal 112 trades. And then there might be some other spec trades that you get into. I really limit these. I think you could drop some credit spreads. You could do some naked puts, depending on the underlying. Some of them are just too cost prohibitive to do naked puts, but credit spreads, totally fine if you want to do that. Broken wing butterflies or any other types of butterfly trades are always good in any account. I'm a big fan of butterfly trades. When you want to be directional, it's a low risk, high reward trade, not a high probability trade, but low risk, high reward. And typically won't do too much on the hedge side, but you can also hedge. So let's jump into actually looking at the account here, and give it a second to load up. Maybe. All right. All right. So in the current account that we have, you can see that I only have 2 strategies working in total. That's it. I have some strangles on futures, and I have some long-term 112 trades. That's it. Right now, this IRA only is using 2 different strategies, and we are pretty close to maxed, or exactly where we need to be on buying power in this account. So this account's pretty close to the 50% mark. If I look at the close of day yesterday, we were at a 173 delta, which, again, I think 0.1 delta is about what I would be looking for. It's about half of my normal account. And then theta 0.2 is the goal, which is about half of my normal account. So 0.1 delta and a 0.2 theta, very delta neutral. You can see what the net lick on this has done here as far as buying power. Yesterday, we ended the day roughly at 50%. We did get a little bit over our skis here, but we're back in sync a little bit today. So I am a little bit more careful on that. Did get a little bit away on that. So let's jump back in and take a look here at the account, and we'll go into the actual Tasty Trade account and look at these things as well. But I have 4 strangles on futures working right now. It's a little over 30,000 using the initial margin, but you'll see that the current BP that's being used on these is less than this. So you'll get a sense of where that is overall when we look at the trades. However, I've got an ES strangle, and we just put that on yesterday. We took in roughly $1,000, $6,600 in margin on that trade. We have a gold strangle. Again, we did 2 contracts on this, took in about 1,600 on this, and used about 13,000 in margin on that. Remember, I said those would average somewhere around, on gold, average around 6,700. So I was able to get 2 on based upon the buying power that I have. And then I have 2 oil strangles on in this trade. These are not their closing prices, since we have not closed any of the trades at all. So this is it. There's these 4 trades going on currently in the account. And then on the long-term 112s, we currently have 7 trades on, of which 2 of these trades we have already closed the naked puts on, and we closed the naked puts on this 15th of September one. We just closed it back on August 11th. In fact, I usually will make that adjustment in here. Just the way I'm tracking these is I will take the naked puts off of these, and then I will also remove the initial costs, and I remove the buying power, since there's no effect really on this, and I'm booking the entire trade's profit. Again, is it the perfect way to track? No, but I book the entire trade profit when I close the naked puts, and then I leave the PDSs on separately, because to me now they're a standalone trade in these accounts. So there's 2 of these that are actually taking no margin whatsoever, and there are 5 of these ES 112 trades that are on right now. So you can see where we're getting the buying power and the margin from. Let's jump into the actual account here. So this is the IRA account. You can see we're down on the day simply because you've got nice little selling. Markets are down about 1% on the day. SPX down to 43 and change on the day. You can see ES down about 44 bucks and change on the day. Overall, as we look in here on this particular account, there's 2 strangles on CL that I have working. These 2 strangles, one's at 43%, so it's about to come off for a winner, and the other one's at 45%, 46%. So both of these should close any day now. No, oil's down a bit today. However, these are up nicely on the day. So I would guess 24, 48, 72 hours from now, I'll probably get both of these closed and we'll be out of these strangles. I'll probably put one more new one on oil. We also have a gold strangle working right now. And you can see that this one's at 8% in 21 days. So gold, because gold has just been getting smushed a bit here, this trade's not working as fast, but it's still up decently. And if we take a look at gold overall, I'm looking at, gold getting closer and closer to an oversold on the daily, but I think we still could fall further. We're in a little tight triangle. We could move one way or the other on gold. So ES, here's the 2 oldest trades. One's going to expire in 3 days. Again, there's no naked puts attached to these any longer. They're gone. So simply, we just have these 2 trades left on. I'm not really worried about the P&Ls for the day or the open unless this market decides to, crack down 500 points in the next couple of weeks. Then maybe we'll see some juice coming back to life in this one. In 3 days, we're pretty much toast here. So you've got this 112 trade about to come off, and then this 112 trade has 30 days left in it. We'll take a look at the other trades, and I'm using the grouping here on Tasty Trade. You can see we have a September 29th 112 trade, 45 days left in the trade. We're sitting at an 84% gain on the naked put. Because we're not at 95 or so yet, I'm not doing anything with it. No sense taking it off here for me on this particular trade. So this one's going to stick around. Overall, this position's up 1,100 bucks. So doing just fine. We've got this October 20th one. We're at 58% premium capture so far on the naked put. Nothing to do there. October 31st, we're at 30%, nothing to do there. November 17th, we're actually down a tad on that one. We're up overall on the trade, 6%, but the naked puts themselves aren't moving at all yet. And then lastly, we also have this November 30th strangle where the naked puts are down a bit on this particular move. We're sitting down here at 3,700, which is 800 points lower than here, which is almost an 18% or so move down. So nothing to do. This trade's been on for 15 days. And then you can see we also have this strangle that we put on yesterday. It's down 10% on the move today. Nothing to really get too excited about. In this one, we're sitting around 3,750 on the low end and 5,000 on the upper end. This strangle's a little wider than normal. So there's really where we are. We have nothing to really manage. There's nothing to do. You are waiting for these 2 CL puts to come off on this particular trade. So it's a pretty simple, straightforward. I mean, there's not a whole lot of magic that I'm showing you here on it. Is really coming when it comes down to it. I think we're just going to continue to make sure that we keep it simple and we take those naked puts off on the trades. We're keeping these strangles going. And then from a size standpoint, we're a little higher because we have a little bit larger contract size on a few of these, but I'm also understanding that I'm about to close those CL strangles right now. So that's why I put that ES strangle on, was to add a little more theta to this particular account. But as a whole, we're still sitting around that 50% BP usage on this particular account. Right now, this account is now up to, what did I say yesterday? A little bit ago, we're now up to 225,000 on this account. Our P&L year to date on this account is up 26,000 and change. So we're over 10%. So we're closing in on that 18%, a little bit at a time. But my BP is totally under control. It's a little high. It's been a little high around the 50, the mid to upper 50s. I did have some additional size trades on. I'll be watching it when CL comes off. I'll probably not size quite as big on that one that I had on here, but I really do like oil, and I felt pretty good about where we are on that. So I like having the CL gold strangle mix. I did pop an ES strangle in this one, but there's where we are on an IRA. You saw the account. There's not a single other style trade in this account. There's no credit spreads. There's no, other types, I don't know what butterfly trades. You don't see any hedges in here. I haven't really seen the need to want to hedge. If I'm going to hedge and you want to create a little drag on that account, we certainly can do that. I don't know that I feel that the markets are at a spot yet where I want to worry about the IRA as much. I'm not into hedging as much as everybody else is. So I don't want to get too carried away on these things. But if I take a look here, what could you do on ES? Again, you have a couple different choices. My preference has been, the 14 DTE trade, grabbing somewhere around, the 3 to 5 delta-ish, but I like the 3 around $2. Sorry, I didn't mean to do that one. So if I want to buy some hedging here, I can keep going out on these. Now, understanding the way it works, this is why I like futures. I can continue to add 1 or potentially 2. Adding 2 of these every week is going to cost me $200, which is going to put about an 800-point drag on the account, which is okay. It's going to also free up a lot of buying. It's going to free up about $8,000 in buying power. I could potentially use, because I'm not afraid of where my buying power is at 50. I'm not too worried about trying to reduce my buying power. It's just a side effect, a positive side effect of adding these particular types of hedges on. So because I could reduce my buying power by approximately $8,000 by having 2 of these running at all times, that would give me an opportunity to put on one of those other style trades that I mentioned, which would be like a 112 on futures. And how would that look as well? So if I freed up $8,000 there, it would give me about $8,000 to put something else on in this account. So let's just take oil as an example and see if we can make a 112 that would make sense, understanding the buying power. Standard 112, about 60 days. So I'll go out 60 days. I'm going to construct the standard and we'll see where it goes. I'm going to look for about 25 delta. I'm going to go 1 wide on these, and I'm going to take a look at the 5 delta and sell 2 of those. So here's what we're looking for on this particular trade. Crazy that you have to do this on Tasty, but so here's what this trade is going to look like. Let's go. Not really sure what this thing is doing. So taking a look here. I'm going to redo this trade again. Maybe because I have something else on, I clicked the wrong thing. I do not know. I'll put this trade on one more time. And let's see where we end up.
The way our state government works. If you want to
not sure exactly what the have to mute somebody. I think that is Don. All right, I've muted Don. We can resume. So this is what this trade is gonna look like. So what I'm taking in is about $380 on this particular trade. You know, the CL multiplier is 1,000, so I'm going to take in $380 if we stay in the tail. We're going to make about 4 times that if we drop into the trap. Buying power on this particular trade. I want to make sure that that's the right buying power on this, so bear with me for a second. That is not, that is the standard buying power. My buying power is going to be all goofed up on this particular one. All right, so buying power is going to be goofed up because I have other trades going on. It's only going to use up about $500 in a credit of $500 in buying power. But on a normal basis, this particular trade is going to give me somewhere around $5,000 to $6,000, $7,000 in buying power. When I had figured out CL the other day, I think it was $5,700 in buying power for one particular trade. But on $5,700, I'm taking in $380. So what is 380 divided by 5,700 in buying power? Gives me about a 6.7% return on this particular trade in 60 days. So it's a good sense of good return. This is a good trade that I'd like to have on. So if I added some more, this alone, this 380 would pay for probably both of those hedges. And I would save about $8,000 by putting those hedges on. And I would use up about $6,000 to put this 112 on. So it's, you know, even though this takes 60 days, I know it's not apples to apples, but I'm going to offset most of those hedges by getting on 1 or 2 of these types of trades. You can select other underlyings. Maybe you want to try the Russell. Let's see what that would look like if we wanted to do Russell. I don't like Russell. I hate Russell, but let's take a look at it. Anyway, we're going to probably have to massage some things around on Russell. Yeah. I can't necessarily make this one work quite as well on Russell. So again, you have a lot less options when you're dealing in an IRA. This one you would have to really change quite a bit to be able to get this thing to where you want it on Russell. But again, you could do something where if we have the buying power, we can do something where we're generating $430 to offset those. I could also put on credit spreads to pay for those hedges. It's kind of weird to put things on to pay for a hedge, but I think the fact that those hedges pay off significantly. So when you're putting those hedges on in here, go back to ES, and go back to a 14 DTE hedge, and I'm going to grab, again, something around $2 just for the heck of it. So if we take a look at this particular hedge, okay, this is what you would be getting for $200, or for $100. I was going to do 2 of quantity. So if I'm putting this on, I'll drop down. Okay, so if I put this on here, if we drop down somewhere in that 4,000 mark, and why is that important? If I take a look at most of these strangles, or I'm sorry, most of these 112s, look where my puts are: 3,500, 3,400, 36, 3,700. So 3,700 is where I'm going to start to get tested on those or strangles. So where is what am I going, and I can take assignment, but 3,700 is where I'm going to start to incur. It won't be, that's where I start to incur pain, but that's where a lot of the pain will potentially happen. I'm going to go back to that ES trade. We got to redo it again. I'm going to have to redo this trade. I love Tasty. It's my favorite thing in the world. All right. This is the craziest platform. All right. So if we were to start to get down into here, now this one hedge is going to start to pay off 10, 11,000. By the time we get to 3,700 or so, this one hedge alone is paying off about $18,000. So it'll start to help if I'm going to take assignment way down in here, or if I started to close these out. If I ended up getting a couple more of these on, I'm sorry, that was only one. That was two is what I want to do. So 2 contracts. By the time I get down here, we're about $35,000. Sorry to redo the whole trade, but at 2 contracts, as we move lower, down around that 3,800 level, I'm going to start to pay off around $24,000, $25,000 by the time I get close to 37,000, where I would be taking assignment. This one would be giving me around $36,000 in income, which would go a long way. So not only would I get the trap profit pieces, I could take assignment. I'm going to get $36,000 from just one of these. If I'm putting 2 of these on, it's going to net me somewhere in the neighborhood of $70,000, $80,000, which would be nearly a third of the entire account, or more. I would gain 30% or more in that account. And I'm technically not out anything if I take assignment. You can continue to watch the trade. If I were to buy an ES contract in here, so if we were just to buy one ES contract, okay, it's going to cost me about $24,000 in this account. So as taking assignment would not be ideal for me. It would be to roll those out, or you could close those and let those hedges take effect. I really don't want to take assignment in an IRA on those accounts. So anyway, simple account. It's not using a lot of trades. There's not a lot to manage. There's not a lot I have to do in this particular account. You can see these trades are performing pretty well overall. The only time they're down is when it's just the PDSs left. And right now, these are a hedge. So I've got just one contract on 50 wide. So it's not going to give me a ton of money on it. But at 50 wide, that's $2,500 per PDS. So there's $5,000 in PDS if the market goes down there, as well as each individual trade would be 5,000 to 1,000, depending on your quantity. So there's my trade plan in a nutshell on the IRA. Nothing fancy, nothing phenomenal. There's not a whole lot of stocks. There's not a whole lot of anything else going on. You can hedge. To me, I think the ES hedge is the best way to hedge. It's a low cost drag, a little bit of a drag. You can finance that with, to me, some 112s on oil or gold or any of those other pieces. In an IRA, it's not super advantageous to do a lot of 112s. They don't pay off well. ES is the best underlying for that. But you can find a few out there that you can sprinkle in, and you can be a little bit more conservative on that. And my goal here, again, is not the same as the trade plan. So there's my IRA. There's the layout of this particular one IRA that we're using. They're all similar in size, but they might be using MES. They might be using fewer strangles. They might be using more ES contracts. They might be using 4 or 5 contracts. They might be using more strangles. So I'm adding strangles. I'm adding size as we go up, but I'm still sticking inside of my trade plan, which is, again, pretty simple, pretty basic. There's nothing crazy that's going on in here. If I'm only trading about 3 different strategies overall. Leaps don't really work well in here. If you try to trade leaps in an IRA, that's not going to play well. So you are limited in the types of trades that you can put on. If I'm trying to trade a SPY leap or something in this account, going out here to 318, going down to around 12 delta or so, just to sell one SPY leap, it's going to cost me about 35,000. It's just not something I'm willing to do. Some people have suggested, do you want to do credit spreads? You can, but how wide of a credit spread, do you have to get to make it worth your while on this? Potentially, if I want to, increase some quantity, let's go. We can't go too crazy here, but maybe let's just do a 30 wide credit spread, and we can put 4 of these on, taking up about $10,000 in BP. This is one way of doing it. If you want to, I'm using it's cash secured essentially, but so it could take assignment at 355, which is a significant downtrend from here. You can go a little narrower, however you want to on this. You can pick 10 delta. You don't have a lot of choices down here. However, you can put these on leap-wise, and I'm generating about $500 using about $7,000 in margin. I would close these at 50%, or you could close them at 30% if you want. I think because how slow they go, that maybe 50% is where I would want to be on these. But putting this on is also going to pay for those hedges as well, and the max loss on this trade is only $7,000. But you would really have to get down significantly here on this, and if you took a 2x max loss, okay, you're only talking about $800 to $1,000 loss if you put a 2x loss on this particular one. So you can generate some additional cash flow using SPY. You could use ES, you can use others, but I think looking at credit spreads in LEAP format or 90 days out is something to potentially take a look at in here. My buying power, I'm pretty careful with what I'm doing on these trades, but you could go out here. I'd probably go a little bit lower, but let's just pick 7 delta, go about 30 wide or so. You get about $500 again. I'm going to have to do about 6 contracts. It's going to cost me 17,000 here if I'm only doing 90 days. I am a lot higher up than that one was. Okay. But it's a significant amount going 90 days. I would rather, if I'm going to do something here, I'm probably taking more of a look at the leaps on these particular trades. And if I'm doing leap, then my buying power for the same amount of money is significantly less, only 5,000 to make 500. And that's a nice 10%. You can put these trades on, and you can layer a handful of these SPY trades on. So it's another way of generating income. If you can't find 112s that work, to me, I go to the spec trades, and I would go to potentially leap credit spreads. All right, there's at least some basic info on IRAs for you. Hopefully this was helpful to you guys. I will pop this video into the Income Navigator. I'm not going to share this thing on YouTube, so it's just for members only, but you can take a look at what we're doing here and get a sense of what trades you may want to do, how to construct it a bit. I'm using maybe more contracts than some may want to use, and a little bit more BP than some feel comfortable with. If you want to stick to 30%, BP usage, or 35, 40%, it's all good. Do lower contracts. And on strangles, you can also get a little wider on your contracts. If I'm doing or a little wider on your deltas, if I'm doing ES here and I was going to do 90 days, instead of picking 7 delta and 6, okay. So this particular trade, oops, I'm going to try that one more time. Okay, if I'm using 7 delta, 6 delta, something like that, I'm going to take in $1,200 on 6 grand, which is about what I said we would do. But if you want to lower these two, there's nothing wrong with 5 delta on strangles, especially out around 90 days. I find that they still come off in about 30 days, and you can lower it. So now I'm taking in 900, but I'm only spending 5 grand now on these. So you can get wider and make these things a little bit more valuable or easier. I mean, 787 on 4,700, even at 50%, this is pretty close to a 10% trade in 30 to 45 days. It's a pretty good return on your money. So I think you can go wider. 3,500 is a pretty close. That's 1,000 points down from here, and all the way up to 49. Almost 5,000. It's not as far away, so you're only about 600 points to the upside. However, I think it's a much safer trade, and you can get out there. All right, that'll conclude it for today. Hopefully this was helpful, just seeing how we construct the IRA trade a bit. It's a lot more simplistic. I'm not using a ton of different strategies in here. There's nothing magical that's happening. I'm really keeping it very, very simple, and I'm letting these go. And this has been generating pretty good cash all year. This particular account, like I said, is up pretty decently on the year. In the IRA account, we've generated over $23,000 in cash on the year so far. And you know what? It's actually better than that, because I have not begun to put August numbers into this. So we've already made 1,400 in August. So we're going to add that number to it. So 25,149 is our total return this year. And we started the beginning of the year at 200,000. So we've made 12% roughly now this year in this account. So 12% by August 15th. So we're well on our way to hitting our 18%, just using simple strategies and not getting too carried away. Okay, and we've also thrown in a couple BA 112s in there on it. But if you really look down at what we're trading, it's just 112 strangle, 112 strangle, 112 strangle, 112 strangle. For the most part, that's all you're seeing month after month on these, generating pretty good cash flow on this particular account. All right, you guys have a fantastic rest of your day, and we'll see you guys all in Discord. If you got any questions, I'll hang out for a minute or two. If not, we'll see you guys in the Discord. All right, thanks, guys.